It is also interconnected with what's just happened in the monetary system with the Genius Act in that new direction. And so I think that part of what we're witnessing, besides the technicals, because certainly the break of this resistance level to a new high is going to be a bigger push. And, silver's got this huge cup formation. It's actually the biggest double cup formation I've ever seen. If you go all the way back to the 80s, I mean, this is tremendous. By the end of the year or shortly thereafter, I think we're very likely to see the spot silver market hit that $50 resistance level. And what I'm looking for is for it to go through it.
Regulation expansion post-Genius, including the upcoming Clarity Act and potential CBDC directives, all of which could influence investor behavior towards silver. The Genius Act establishes the first U.S. regulations for stablecoins, driving adoption and reinforcing U.S. digital dollar supremacy. Macro tailwinds from stablecoins and inflation risk are strengthening investor interest in physical silver. At present, silver's rise reflects broader financial uncertainty and demand for both inflation hedges and digital alternatives. They expect silver to hit and possibly break through the $50 resistance level by year-end or soon after. Lynette Zang, chief market analyst at ITM Trading, is highly critical of the so-called Genius Act, suggesting its name is misleading. On July 18, 2025, President Trump signed the Genius Act into law, formally establishing the United States' first federal regulatory framework for dollar-backed stablecoins. The act mandates that only licensed issuers, including banks, credit unions, and regulated non-banks, can issue payment stablecoins, each of which is fully backed one-to-one with U.S. dollars or short-term Treasury assets. It also introduces monthly audit requirements and strict consumer protections. Designed to maintain the U.S. dollar's global reserve status, the program promotes the widespread adoption of compliant stablecoins while combating illicit activity through AML or sanctions enforcement, granting stablecoin holders priority in issuer insolvency proceedings. The Genius Act will generate increased demand for U.S. debt and solidify the dollar's status as the global reserve currency by requiring stablecoin issuers to back their assets with Treasury securities and U.S. dollars. Additionally, the Genius Act will play a key role in attracting more digital asset activity to the country by providing clear rules and promoting responsible innovation in the stablecoin market. By the time most people realize what's happening, they'll already be trapped in it. Their warning is urgent. Prepare now by owning physical gold and silver, as they believe hyperinflation is imminent and paper assets will lose value. If you find Lynette's insights compelling, make sure to like this video, subscribe to the channel, and ring the notification bell so you don't miss future updates.
The Genius Act, because whenever anything is named such, then it's just the opposite. And you have to remember, I've been studying currencies and currency life cycles since 1987.
Wow.
What people do not realize is that when that act was signed, the new, at least this term system, this is not over. And I want everybody to 100% understand that what I'm saying doesn't mean that, oh, this was a no big deal and we've just shifted and okay, because it doesn't work like that. But they have to get adoption, and they did it, between 2009 and they did it up until they signed the Genius Act, and now they're getting even more massive adoption, and we're all going to be forced into that adoption. But I believe, there is not one doubt in my mind, and I could certainly be wrong, but this is such an extreme feeling for me. And typically when I get these feelings like this, then I'm never wrong. Timing is different, but I'm never wrong about this. The easier and cheaper it is to make new money, the easier and cheaper it is to make new fiat money, more fiat money will be made. This is a repetition of 1914, when they installed the Federal Reserve, and then they used corporate debt, so corporate balance sheets, to turn into Federal Reserve notes and create a whole bunch of money. And people lost about 50% of their purchasing power between 1913. It really started in 1914 because they were legalized the end of 13. But that really started in 1914, and you could see that 10-to-1 ratio. Well, now with this, you've got corporations, again, cooperating to create this market because, of course, who's the one that benefits, right? Corporations. Right. And now create this money out of thin air. What that does is, number one, it expands the money that's out there, but it also is about, and I've said this before, creating artificial demand for dollars, because where it used to be gold backed, then it was petro backed. Now you're looking at the stable coins having to back the dollar to continue to give it a level of relevance, along with the fact that these corporations now are being forced to, they'd have to buy treasuries as well. So for the government, aside from this making a shift from a paper debt-based system, which is what we're looking at here, that to me, my biggest concern is that we have already technically, in my opinion, based on the M2 velocity, entered a period of hyperinflation. Here you go. This is the tool to usher it in. That's my biggest concern, especially since it's done just like when Nixon took us off the gold standard, and I was there for that. And granted, I wasn't an adult, but I was like 17 years old, something like that. So I was old enough for a certain level of awareness. And as brilliant as my family was, and I used to love to listen to my parents and aunts and uncles talk while they were playing penny ante poker, because I'd learned so much about the Depression and World War II and all of that. These are the things that they used to talk about. And yet, what do they say? Well, this isn't really going to impact that. Yes, it is, because we just shifted to an entirely new system. They don't want you to realize it, because by the time you realize it, you will be fully integrated into it, and there ain't nothing you're going to be able to do. So you got to get prepared now. I mean, you better have physical gold and silver in your possession, because I'm telling you, there is no doubt in my mind, we are fast headed toward the hyperinflation.
Lynette Zang emphasizes the urgent need to return to sound money, gold and silver, especially in the face of a collapsing financial system. They support the Citizens for Sound Money movement and encourage people, especially younger generations, to get involved locally and globally. While expressing concern about risky investments like crypto and pensions, they note that Trump is also pushing for physical gold and silver in retirement plans, which offers hope. Historical precedent shows that severe economic contractions can temporarily pressure gold prices through forced liquidations. During the 2008 financial crisis, gold initially declined from $1,006 to $712, a 29% correction, as institutions sold profitable positions to cover losses elsewhere. Current derivatives positioning suggests vulnerability to similar dynamics. CME gold futures show concentrated open interest at the $3,200 to $3,400 level, creating potential technical resistance and trigger points for algorithmic selling programs. While such corrections would likely prove temporary given central banks' tendency to respond to economic weakness with monetary stimulus, ultimately supportive for gold, they could still create substantial drawdowns and volatility in the precious metals sector. Ultimately, absolute wealth protection lies in physical gold and silver, which can't be printed or inflated away like fiat or even dollar-backed stablecoins. Now, let's dive into the interview.
The first thing I would say is call us and let us help you educate yourself. But I sit on the advisory board of the Citizens for Sound Money, And that is actually a global sound money movement. And I think this is an extremely important opportunity to get sound money back in the monetary system again after the collapse. So as the younger generation comes up, and my grandson is one of those, he's 12, but he really understands sound money. He likes to accumulate silver.
Nice.
Me into selling him gold all day long at $15 for a coin. But he really wants to be involved. So it's having these conversations and going to the Citizens for Sound Money movement and seeing what you can do to actually participate in your local government in getting sound money back in the system, because this is really who the fight is for. It's not for me. I'm old. I have plenty. And I'm not even really worried about my family because of what I've done for myself. It's for everybody else's future, because there is no greater fight than the fight for our children's future. And that's been sold down the river, and it's not okay with me. The other thing that gives me a level of hope in this is that while President Trump is considering expanding the alternative investments inside of pension plans like crypto, which kind of scares the crap out of me, honestly. Yeah. Inside of that too, he is proposing gold and silver. I think that he's giving something that he knows that's going to be destructive, because he is a transformative president, and this transformation, because there's no purchasing power left in the currency. On the other hand, I think he's also giving you tools to protect yourself with allowing and encouraging gold and silver in those systems. That gives me a level of hope, because I do think that if we can come together in global community, so we got to do it locally and we got to do it globally, that we can have an impact in the new system, because they can't just back a currency with gold. Once you do that, it fixes the debt at these unpayable levels. And in order to truly go fully into this new system, you need a clean balance sheet. So you got to get rid of the garbage from the last system before you can really embrace and enter this next system. And that's what people really need to understand. What gold and silver actually do is they hold your purchasing power intact here in this old system that, frankly, for me, and I've been saying this since 2008, no doubt about it, died in 2008, and then into the new system so that you actually have some purchasing power to work with. But quite honestly, there are opportunities between here and there. Oh my God, there are opportunities that will present as these currently severely overvalued assets drop down to undervalued levels. And I want people really to understand that what we're looking at here and what we're actually dealing with here is a simple repetition of history. And so if you can learn to recognize the signs, then you can get into a proper position to take advantage of this burnout of all of this inflation that has been pumped into the system by all of this money printing. And I know everybody smiles when I do that because it's humorous, but what people need to understand is once they create this money, whether they do it in physical form or in digital form, it costs nothing to create that money, nothing. So that's why that money goes to zero, because it has no value. The governments and central banks create this money. It costs 9.2 or something like that cents to create a $100 bill. They get to keep that difference. That's their income. And they've been underwater for 4 years. This is the 4th year. Any excess from all that money they create is supposed to go to the Treasury, and they haven't been able to give the Treasury any money going on now for 4 years. So what we have is a zombie government being supported by zombie central banks that are supported by zombie corporations. And now They've got to hyperinflate it away because it's the only way to do this. It is not an easy transition. Everybody needs a foundation of sound money, because it's sound money because it's above central banks and governments. It cannot be inflated away. And the stable coins, what backs the stable coins? The dollar.
The Genius Act marks a watershed moment in the financial sector, bringing stablecoins into the regulatory fold while signaling a broader shift toward digital banking. As investors face growing inflation and systemic uncertainties, silver stands out as a tangible hedge and a crucial asset in the evolving monetary system. Will regulatory certainty surrounding stablecoins encourage the mainstream use of precious metals as alternative stores of value? How might future U.S. legislation incorporate gold and silver into digital payment ecosystems? If this analysis has helped you understand the concerns, please consider liking the video, subscribing to the channel, and clicking the bell button to stay up to date on these critical debates. Thank you for watching.